Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar index still close to its highs. Actually, we're above when we did the analysis. This is like a couple of weeks back when we got that daily close above 99. Actually, let's say 98.42. Which is right here. We had a target of 99.71, but we've reset 99.71. I guess there's a little level lower up in here, which is 99.91, but that was the intermediate target that I had in place. And I actually thought that we were going to take a pause around 99 with that target in place of 99.71, but we've obviously exceeded that. Bear with me. And we are seeing cable a bit weaker here. I made it down here to the 28.95 level again from the prior week. And dollar CAD just a little bit steady. Bigger news once again is going to be this dollar yen, which is really broken out with a vengeance. Even exceeded an area that we found here in early Asia, but we've actually even jumped beyond that. So we'll have to see where this goes. But boy, we've been testing that 110 area for so long, and once we got above it, the thing took off like a banshee, and boy, it was it run. Dollar peso a little bit stronger here, not anything to necessarily write home about. Obviously in equities, we had made some new all-time highs in Asia, and then it dipped back a bit here. Bear with me. Well, not but all-time highs, but a return back up here to these highs. We'll go and take a look at this quickly. You can see here with the S&Ps had made that run up here to 33.90. We'd actually slipped, and this actually sent the dollar moving higher. When we had slipped, not the dollar, I meant to say gold, then we saw this pullback, and obviously gold responded in kind. We've kind of jumped back and forth. We'll go and take a look at the gold. Same thing here, similar. I guess we should move this to the 30-minute here on the NAS, and then of course same here on the Russell. There we go. Let's go on in. We'll take a look at where we are here with the gold market. Oh, we've had a pretty good little run here in gold. We danced around some good little volatility. We were actually looking for this market to dip. We'd had a good strong close yesterday, and my thoughts were we were going to dip back down to around 1612-ish and then bounce back, and we did go and see that, and then we took a further dip. Some great volatility that I played actually on both sides, a little bit carefully. I thought this move back up to 615 was going to be a good little short. The only thing is I didn't stay in this for very long, but eventually had to go to bed. And then we've seen this. Oh God, this was a fantastic dip. I wish I was up at this time because this is where I thought the market was going to break. Potentially when I saw it here, I thought, well, if we get a breakdown, and I thought we were going to dip down to around 1707 and a half, and you can see here we actually got down to 6.5, and then we saw a very nice rally here. We've actually gotten above the VWAP here, so that's actually working as a little bit of support. You can see here earlier this was back in Asia, and we kind of same thing as we rallied back up here. We kind of paused in here into the VWAP, allowed this market to go in and take off. This is when the SPUs were at their weakest, and then we came back to retest the VWAP, bounce back and forth until finally they slipped, and then here we are once again just above the VWAP. Point of control up here at about 1612. One of the concerns also was that as we were breaking down here is that you can see the amount of selling pressure had remained, so really kind of gave you an idea. This was one we made this rule up to 1650. I thought that the market was still vulnerable because you can see here sellers were still controlling that, so it opened the door for us to come back and dip lower. We'll go on and take a quick look into crude oil. This is another one here. We were looking for, I've made the case with some charts on here, really just going with the charts. That's it. Why bears are going to be in some trouble here. You can see here on a weekly, we've got a double bottom here. I mean, you got, I mean, double bottom in the sense, I guess you would say, not necessarily double bottom in the sense, but looking for a tweezer bottom. You see here, and I was saying, if we can get above 52.84 on a closing basis for the week, that's it. This double bottom, or I guess you call it tweezer bottom, is confirmed. And certainly with the daily, we're looking for, hey, watch out, which before we saw that dip on the Apple news, my thoughts were we were going to make it to 52.92, 95, I think it was. And then we saw that Apple news just really kind of shook things out. But look how we came back so strong. And then, of course, we added on to that, really putting the bears under pressure here. Here's that, let's see, we made this run up here. This was in Asia, up here to 53.97. I was posting that in the posting this in the chat room at the time. Hey, watch out! You know, we're put on here resistance here at 53.97. I was thinking we might even push just a tad bit higher, but still already a pretty good run up in here at this point. I was afraid they may just get up to, I think I had, yeah, this 54.34. I mentioned resistance at 53.97 and 54.34. I thought this is going to be a good resting place. We've paired back. I mean, there wasn't any real significant area where I could say, okay, this was right where it ran out of gas at. I mean, we were above 52.97, but I thought we were going to get a good signal, like get up to 54.34 and then really come back. We just kind of weakened here. If you look at that, pair this back. We made a new high, and then we just kind of, it was kind of odd a little bit. I would have thought that, I'm telling here, usually you get the pullback here and then maybe a weaker high, but instead we went to a higher high, but very slight, okay? And then we started to just gently slide and slide and slide. But certainly this is the market we bought on dips here. But I thought that was going to offer a good opportunity if we'd gotten above 54 for a short. But I've been pretty much fooling with gold, which was through Asia, and then finally I thought maybe we were actually going to finish stronger. And there's a potential that we could try and test these highs. The only thing was that when we got up to 16.15 yesterday, I thought the market might take a pause there, and then I thought we could explode later on. But at least for right now, we're just trading at 16.12. One of the things that we saw yesterday was the sellers remained in control the entire time, even though we were making new highs. So I mentioned that. It gave a hint, and I posted a chart, gave a hint that this market could still weaken, and that was my thoughts were, hey, look, even though it's closing at 16.15 or ish and opened around there, I thought we could weaken, and then we'd go back and forth. Still a bit on the weak side, though, nonetheless. So with that, let's go on and move back into currencies, and we'll take a look at economic data. Okay, at the bottom of the hour, we have retail sales, UK retail. Look, the last couple of days with this UK data, it hasn't even moved the needle, not even one doggone bit. I mean, we've been like, okay, we're on top of the data. And then it's like, I think yesterday it moved like 8 pips. I mean, so if we're there, we'll look at it. But I mean, it's certainly nothing that I'm going to hang my hat on or anything like that. I mean, it just hasn't moved. The cable in itself has moved eventually, but on the release of this data, hasn't even moved a doggone bit. Later on, coming into the States, we do have jobless claims and Philly Fed, which comes in. I remember the old days, it didn't used to come in that early. I mean, it's been coming in at 8:30 Eastern for a while, but it used to be somewhat later. But anyway, Philly Fed, and then we do have Canadian new housing price, and let's see, and LEI at 10 a.m. Eastern. We did have employment data for the Aussie, and the Aussie at the time You can see the Kiwi making new lows. At the time, and yeah, it's lower now, but at the time, it didn't even move a needle. It barely even moved when the employment data came out. And the employment data came out, I think it's 5.3%. So it was really was the concern that what opened the door for us to move lower, and it didn't even barely even move the needle. There we are, right there. I mean, eventually, it looks like we did eventually go and break a little bit lower here, but once again, nothing. We're now starting to see as the day rolls on a little bit lower here. With that, we're going in and take a look at the news. Now it finally rolls lower. Australian dollar dives to near 11-year low as jobs data disappoint. The Australian dollar slid to a near 11-year trough on Thursday as data showing a surprisingly sharp rise in unemployment added to the case for further cuts in interest rates at a time when markets are already skittish over the coronavirus. The Aussie delved as deep as 66.33, lows not seen since March of 2009, having sunk from an earlier 66.95. Chart showed scant technical support until lows around 62.80. I have a weekly support at 65.28 that we're looking for the market to move to as an intermediate or interim target. New Zealand dollar fared a little better, dropping to a 3-month low at 63.54. The Aussie came unstuck when data showed employment rose to 5.3% in January from 5.1 the month before. That overshadowed a 13,500 increase in net employment and a jump of 46,200 in full-time workers, underlined the spare capacity remaining in the labor market even after months of continuing job gains. The RBA has repeatedly said it would reconsider cutting rates again should the jobless rate trend higher in a meaningful way, although it would much prefer a period of stable policy. The leading indicators of employment have softened, and the activity data continues to paint the picture of soft private demand. We remain comfortable with our view that the RBA will resume policy easing in 2020. April looks like the most likely month for the next 25 basis point cuts. Australian government bonds were also caught a bid, with the 3-year bond up 4 ticks to 99.32. Analysts said sentiment had also been spooked by a run of alarmingly weak Japanese economic data, which raised the risk of recession. Japan is Australia's second biggest export market, and a downturn would only add to the economic risk posed by the coronavirus in China, its single biggest market. And dollar favored safe haven as funds flee virus fallout. The dollar was sucking up funds across Asia on Thursday after a steep and sudden slide in the Japanese yen called into question its safe haven status and spooked investors out of local assets. Everything from an Australian dollar to the Indian rupee were under fire as concerns about the impact of the coronavirus drove money into the U.S. currency. Yeah, it's still King Dollar, and King Dollar is going to remain King Dollar probably for the next 5 to 10 years, realistically. I mean, I think about only a few years ago how everybody was laughing about how the dollar was going to weaken. Not that I've been such a dollar bull myself, but I'm saying as far as the dollar not being the safe haven currency and on and on and on. And the dollar is going to always, for some time, remain just that. Anyway, China reported a drop in its new infections on Thursday, but scientists warned the pathogen may spread more easily than previously believed as 2 elderly passengers from a ship quarantined in Tokyo became the latest to die. People are trying to get far away from the economic fallout that we might see from the coronavirus. You want your capital in as far away from China as possible, said Chris Weston. The sentiment continues to be to buy U.S. assets. Some people are saying if you want a safe haven currency in the portfolio, you have U.S. dollars now. over the yen. The yen's fall from grace began Wednesday when heavy and persistent selling drove the currency down across all its peers, many making the biggest moves seen in months. A run of dire economic news out of Japan has stirred talk. The country is already in recession, and the Japanese funds were dumping local assets in favor of U.S. shares and gold. Yeah, it's interesting. I was trying to look at the right word, but for the Japanese or the situation, basically like a new dynamic, I guess I should say, like with the dollar yen, is because the yen has always been a great safe haven currency, but now, as the gentleman was saying here, excuse me, when he said people are trying to get away from the economic fallout, as and as move your capital. Here we go. You want your capital as far away from China as possible, and the thought is not only because you're seeing the dynamic in the sense is that, as they were saying, is that the yen has always been a safe haven currency. So it's almost like a twofold thing, where I think while you're seeing that continued selling, not only have we broken, this key chart level, the 1010 or 110, and now you're getting that move, and that move is a bit, I wouldn't say exaggerated at this point because we've seen some other moves before in the dollar yen, but also it's not only moving into dollars, but when you look at where U.S. equities are, it's not a matter of you park your money in dollars and okay, you'll be safe for a while. You're parking in dollars, and depending on what assets you're putting in, you're making money on top of that. You see what I'm saying? So it's almost like a twofold type, situation. But anyway, and then it does appear that Japan may be moving into recession. They've talked about I think I saw where they've expanded the balance sheet now 105% of GDP now. Bank of Japan has. So a run of dire economic news out of Japan has stirred talk that the country is already in recession, and Japanese funds were dumping local assets in favor of U.S. shares and gold. As a result, the dollar celebrated its largest gain in the 6 months to stand at 1138 yen. The euro was taken in the view of 2021. Euro yen having controlled climbed 1.5% overnight. Of course, we know the euro. Give me a break. Look, the only thing it's gained against is probably just the yen, because look how weak it is. The shift to things, all things American, saw the dollar climb 0.3 against the Chinese yuan to 7.02. The critical thing to understand is the yen's weakness is not so much risk on as it is Japanese asset managers heading for the Tokyo market exits in droves. And this is a bit concerning here, where this market could go, and the issue also with the Japanese bond market. You'd have to be very careful standing in the way of this dollar yen. And I'm not one to, I don't have a dog in the fight, but you just have to be, you have to go on and it's something, look at how we're still taking off here in the dollar yen. We'll go and move into the analysis on there, but I remember this was years and years ago when the dollar yen was trading. It was like 105 or something. We had bigger moves in, and we jumped up to 107, and then I think it's like 108, 80 or 50 or something like that. And of course, a different situation, but at that time, the Bank of Japan took some steps. And I remember at the time I was short, and all of a sudden it jumped up to like 111.20. Fortunately, I jumped out, and from there it proceeded to go and move on to, I think it was 115, but the thing is, like I said, you have to be worried is that not only have we jumped higher, but it's at the beginning of potentially a much bigger move. Not to be an alarmist, but you can see here how we've just clipped along here, and we look on our way now to 112. And certainly when you see a market jump out, I've been myself the type that sometimes will stand in front of a train and jump in too early, trying to fight it. And I've seen some people trying to already do that right now, even though we've jumped up. This thing could maybe get some legs on it, so you have to be really careful on this here, because there's not only from a technical standpoint, but there's fundamental reasons. Just like I said, it looks like, those folks are actually starting to run for the exits here. And that's a little bit concerning here with the Bank of Japan, with their whole situation, what they've got. It's just, one thing could lead to another, and it could happen rather quickly. That all of a sudden you see it move, scoot away. So you need to be careful trying to step in front of this too soon. Anyway, that's my take on that. Let's go on and move into the analysis. Okay, so just I was pulling up the bias chart. So the euro managed to hold above the weekly support level of 776. The pair is oversold and a bounce is reasonable as shorts will step aside for a better entry. Support remains 776 with resistance at 838 followed by 861. The first value area for short will be not till 911. So you can see right here, this is potential we can move here. We actually, it looks like we've already made a dip down here to 776. If we pull this further back, we've showed that before, it could move as low as 726, but that was our support from yesterday, 776, and that's going to remain the same here, and you can see where I'm pulling this up from here. Bear with me. There you go. So you can see here the 776, and when I was looking at, you can see the different touches here. And I always mention that I was on the Face webinar just about a week ago or something like that, and they mentioned, that I always usually put my, levels, I put them through the bodies, and one of the reasons, although this is on a much bigger scope, I always try and see where I get the most touches, and I go with the body. So essentially, that's what I've come up with here, and that's how I came up with. You can see here from 776. You can see same thing, the same with the touches across here on 726. But I think the 776 probably pretty decent chance of holding here. It looks like that may have been the low this morning too, 776. So there we go, 776, that'll remain the same. And support remains 776 with resistance at 838, followed by 861. So it's going to be 838. And let's go move into the cable. Okay, great. And Jane's in the chat room. She said she's, because she usually comes in later. She's listening to the webinar. So great to have you, Jane, during this time. And Jane follows the crude oil pretty much. We actually covered the crude. I don't know if Jane, if you listened to it, we started out the show covering crude and gold, and then we go into the analysis, and then we'll finish up the show once again covering gold and crude. Let's go and move in with the cable here. And the cable broke lower, closing below the pivot of 29.80 and thus shifting the buys to bearish. Support comes in at 28.84. You can see we made it to this 28.98 before last week. You can see here is on a previous week too. We dipped down to right there to the pit we had it before for a rebound. Maintained it again. Today, I'm saying that our bias chart, which is lower because we've shifted that now, because with this close again under the pivot, we've now, as you can see here, we've now are shifting the bias now to bearish, which is, even though it was oversold last week, we talked about this, that even though we did get a bit of a rebound, bulls weren't buying it. They've been fooled so many times and dramatically fooled that they weren't going to go that direction. So our bias chart support here, you can see is going to be going back here is, let's see here, support comes in at 28.84. We actually have a little bit closer because it says followed by 28.46. So 28.84. Surprised I had that at high as opposed, but yeah, that I think I was looking at a 2-hour chart when we came into Asia. So 28.84, the low so far this morning It's 28.83, so I guess not bad, not bad. That was the analysis from the Asian session. Just want to do that. So not bad, not bad. Missed the low so far by a pip. Let's go on and move into the Aussie dollar. So the Aussie, and once again, this was done before the employment data. Aussie on the precipice of the jobs report has the potential to move to 66.19. Looks like we went right just to 66.19, which is 161% of this prior move of 66.79 to 67.76 in the Asian session, meaning that's what we thought we could potentially go to in the Asian session, which would be 66.19. Weekly support beyond that's going to be 65.28. We did mention that, and we'll go on and move into the weekly charts. We're going to take a look at that. There we go. You see the 65.28. Once again, going through all the touches here. Potentially, I think we can make it there, but for now, support is, as you can see here, 66.19, which is 161%, and the low today has been 66.22. So not bad. 66.19 is what we have for our bias chart support low today. And for those that may be new into the webinar, remember the bias chart is focused on very short-term trading, and these levels are good for the next 24 hours. So, you know, once again, I think potentially we can move down to 65.28, but for today, coming into this session, it's 66.19. Of course, like I said, this analysis was done before the jobs data, so that's what I thought we could potentially stretch down to, and so far the low's been 66.22. Looking here for the on the upside, if we want to call it that, we'll go in and take a look at this on a 2-hour chart. Retail sales, UK retail sales data is coming out, so bear with me 2 minutes. We're actually going to go with just the high up in here, which is going to be 66. Might be a bit low here. Got 60. Well, I'll tell you what, we'll go with that, 66.42. We're going to keep it pretty tight. And with that, we'll go and take a look at the cable here. Not giving it too much faith because the last 2 days when we've covered the UK data, it's been quite the disappointment as the thing hasn't even moved. I mean, yesterday, I think we talked about, we were showing it, I think it moved 8 pips. So let's take a look where we're at. Data coming out. I think, you know what, I'll tell you what, we'll cover. There we go. So we'll have, here's the guppy, starting versus the odd, and then the pound here. We'll see what kind of movement we get. Data is out in a minute and a half. So retail sales poll is going to be 7/10. Last month was down 6/10, so quite a bit of a change. Ex-fuel, 8/10. Actually, energy prices had a big impact yesterday on yesterday's data. Let's see here. So let's see how we come out. Data is still a minute away. And once again, there we go. So the guppy here, sterling odd. Let's see if it's going to be a dud, just like the others have been a dud for the last couple of days. Uh, 20 seconds. Once again, their headline number is going to be expecting 7/10 on the Reuters poll, compared to last month's negative 6/10, 10 seconds. Okay, up 9/10, so a stronger number, and wow, another disappointment. Look at that, no movement. I think we actually jumped 5 pips. Maybe not even that much. I think we may have jumped 3 pips. A little bit stronger here on the guppy. Said that revision is a little bit higher. I do see the prior was negative 6/10, revised up to minus 5/10. Did come in there, Reuters published for 7/10, came up 9/10, and of course, once again, another disappointment. No movement, basically. A little bit stronger here in the guppy, but once again, the yen's been weaker anyway. So as the saying goes, next, nothing here to see. Let's go and move into the Kiwi. Well, we did see the break of this key level, the 63.83. That's what we have had it marked in the pink. Says the Kiwi is managing to defend the critical level of 63.83. Once again, the analysis was done to the Asian session. A break below has the opportunity to send the pair to 62.89. Support level ahead will be 63.26, which we've almost hit that 63.26, which is confluencing with 63.23 to 78%. So you can see we finally broke the 63.83. We're kind of holding it here. We held it, saw a nice rally back. Came up short of the breakout level, which was 64.93. That's that key breakout level that sent us on our way with a great 3-week run before it came all apart and fell from grace. Potentially, I think this market is going to come down to 62.89. But before then, we do have support coming here at 63.26, which is confluence with 63.23, the 78% of this move. So bias chart support today will be 63.26. And resistance, which is going to take you can see the coming across right here, right there. That'll be resistance, which is going to be 63.99. Let's just call it 64 even. Obviously still bearish. Let's go move into the dollar CAD. Well, we just started mixed bagging it with this dollar CAD here. The dollar CAD continues to trade defensively. Initial support comes in at 32.07, followed by 31.77, and resistance is going to be 32.58. Well, we're knocking on the door right now. The high so far has been what, like 32? Well, it looks like the high's been 32.58. Let's take a look here. 32.57. And we're stating here that the high for today, or not actually we'll call the high, but where we see resistance comes in, you can see that 32.58. So we're going to go with that. Now, potentially we can see this market move down to 32.07. We've come snack back rather quickly. Look, before we get there, and there's the 32.07. We're holding up rather well right now, but you can see it's been up and down. Look at this, down, up, down, down, up, down, up. So, you get this engulfing line. You're thinking, boy, we're definitely going down here at 32.07 and just right back in your face. You can see the 32.07 coming here. And we'll go with that, which is the analysis for where they can potentially get to. We did have 32.19 before, but we're going to go with this 07, the updated support level. Who knows? Maybe tomorrow's going to be back down again. It's just been up and down. Like I said, we just have not been able to. We've just kind of like just been marking time, like spinning the tires in the sand. With that, let's go and move into the dollar peso. There we go. So the dollar peso remains understandably weak with support at 1851, that is, followed by a weekly, you can see that at 1841. Resistance is going to be 1865, and that's where we're at right now. You can see this 1865. So, oh, we're sure hitting these key points. So 1865 remains bearish. Support 1851. Potentially we can drop to 1844. And we're just kind of, despite what we, even when we see pullbacks in the U.S. equity markets, we're not seeing much of a difference or much of a movement here in the peso. As I said, I pulled it back here so we can get a little bit better feel. As I mentioned, this 1844 pulling back. You can see that here. The interim support before we get there, and it's been holding, has been 1851, which is our bias chart support, and our resistance is right here. This level they've been at and tested several times before, which is the 1865. Could punch it up to 1868, but that's where we're at for right now. With that, let's go and move into the dollar yen. This one has really taken off. Well, here we are. I didn't even notice this. We've got a key level, 1187 here coming here on the dollar yen. Now, we've mentioned here the dollar yen rally passed above 1051, allowing the pair to trigger stops above 1150, resistance 1164. Now, we found the 1164 on a 2-hour chart, but you can see this 1187 is a key level. Look at that. Look at all the touches here. So maybe we have something here. That would be a good area for a pause. And let's take a look on a fib. Let's see if we have anything as far as a fib. See, we've already had this low here. So that's not a good level to go with this as a fib, isn't. So we're going to mark this 1187. We'll see what it does here, but this is a pretty key point here, this 1187. Certainly it's bullish now. Well, it's actually been bullish, but so maybe we'll get a little pause here. Certainly some good touches here. Look at this. And it's been a key battle zone. Look at that. Once we broke below it, we saw a pretty good rally, pretty good fall on that. And then when we rallied back, look what we kept having trouble with on a closing basis, 1187. Once again, putting my levels right through the bodies. We came back to challenging before breaking hard, rallied right back, came up short of it. Then once again, we get above it. It ends up being a good support level, which had been a resistance level. And then once we break lower, we just start sliding back down again. So here we are revisiting back 1187. Looks pretty good for today. We'll take a look at a 2-hour support right there, 1125. Probably can move it a little bit lower, a little bit higher, I should say, with this close there. So support's going to be right there, 1135. Amazing the move that this thing has had. If we are going to see a pause, that's not a bad little area here. I talked about not wanting to stand in front of a train. But this is not a bad area here. 1187. Not bad at all. Beyond that, potentially could make it even all the way up here. 1218. But this is not bad. Let's go move into the cash dollar index. So the dollar index has reached the intermediate target of 99.71. I would expect a pause after the mercurial rally. Resistance remains 99.71. Will support LB at 99.25. Well, if you can push even higher, we actually we potentially could make it all the way up here, which is 99.92. But you can see they're kind of holding on here at 71. And here's resistance at 99.92. Okay, we'll give it in case this market wants to dip. I think we've had such a phenomenal run on this market already. There's the 99.92. Once again, you see the touches coming across here. So we can pull this back a bit here. There. Well, we'll go with that for 99 right there. 99.92. Wow, what a run. But it's, they mentioned about the dollar yen, not the dollar yen, but I meant the yen per se, was that even though about the safe haven status is that they're mentioned is that people just want to get out of the yen. And it's almost like a twofold thing. Because like I said, not only does it saying you want to get as far away from China, that's what the gentleman is saying, but you're getting gains in the US dollar. Then on top of that, the situation in Japan with all that printing that been doing, and then portfolio managers, as they're saying, running for the exits, you could see this thing really catch a life of its own, and that's why you have to be very, very careful with this, stepping in with this, taking on the yen or selling against that yen. Selling, I mean, with the dollar yen. Obviously, they're selling the yen, but trying to step in and try and go the other direction. On the support, we can take a look at a 2-hour chart. It's going to be right there, 99.40. If we do get this breakdown, I mean, we can easily slide back, and this thing is still a wild buy, but 99.40. Well, with that, let's go on and move into the cross rates. I always see a little bit of gain here with on the backdrop of the selling of the yen. But Kiwi in itself still remains weak. That being said, we're just going to right there for today is 71.15. But once again, like I said, well, it's with the Kiwi, so I think this is relatively safe here. But once again, my concern is, like I said, the yen looking further out. We could see potentially precipitous selling, but 71.15. But it's not like as if you're going to think that the yen's going to gain or that the Kiwi is going to gain that much against the yen. I wouldn't think. But once again, we're going to be with 71.15. Still bearish overall. Support right there. 70.76. Well, you can see here, we've seen a pretty good run already here with the euro yen. We're actually coming into some resistance right now. This may confluence, at the same time we were talking about with the dollar yen at 1187, I believe we have it. Yeah, 1187. So we're also coming into a key level here with the euro yen, and that's going to be 2096. 2096. Support's pretty clear. It's going to come in right there. 1998. Quite a ways down. You can probably move that even a little bit higher. Actually, let's go move into the 2-hour chart. There we go. A much closer support comes in at 2046. But if you're seeing how far this thing could break down, 2014, let's go with that for short term for today, which is going to be right there, which actually coincides with this lower here. It's going to be, let's call it 2045. 2045 on a very short term basis. Euro, after finding the support down here on the 61, even we finally broken up a little bit higher. Um, Resistance is going to come in right there at this level. I mean, these are some of these levels are pretty clean. I mean, we got above it, but that's going to be the resistance right there, which is going to be 62.96. And as we break above this area, you can see here, this will be basically line demarcation, which is going to be 62.06. You can actually make the case that potentially it can even work higher, but any pullbacks to 62 right in here, 62.06 are going to be well defended. You can see just the touches coming across here, right there. So we're going to go with 62.24 for an area for that support. We've broken above the 62.06, but it's the key on the bottom on the way down is going to be 62.24. We'll move into the euro, Kiwi. Well, we have gone and broken out above this 69, 67 area. Resistance is going to come in right there. You see this spiral high right here? That's going to be resistance. And that comes in. So actually, they just about tagged it, which is 70.49. And on the downside, right there, coming across, you can see these touches coming right across here. See that? It's going to be 69.71. Now let's quickly jump into the Aussie. Obviously, the Aussie data has made its own impact, but that being said, the selling of the yen is creating a bit more demand nonetheless. So resistance clears, the bell comes in right there at 74, not out. 74.50. The key is if we can get and maintain a hold above this 74.02. That's going to be key. But at least for today, you can see here where we're coming out with that 74 right there, 74.50. Tagging that. Support on the downside obviously is going to come in on a test back of the 74.2. We can see if we can see something a little bit closer on a dip. And certainly we do right here. You see that? 73.90. Right there. That's where you're going to step in and try and defend this thing. Let's go move into the guppy. we're keeping it simple right here. Cross this level here, which is going to be 4504. Not too much higher, but 4504. So you can see this yen weakness across the board. And support comes in right there. 44.15 right there, taking out that high. And finally, let's finish up with the story nod. Well, you can see we broke out that triangle. We have not been able to take out this 94.83, and that is going to remain resistance here. And that's since yesterday. You see here, that key major level of 94.83. There we go. There you go, 94.83. And we had support, and that's going to remain the same, 93.38. Remains the same. So that's going to do it here for the pairs, including the majors. Euro came as low as, Euro got all the way down to 778. We have our weekly support at 776, kind of working a little bit higher. Dollar yen, look at this, continues to press higher. And we had a resistance at 1187, and we're still pressing even higher right now. Now, the key is 1187 on a closing basis, but look, we're still going. And like I said, you're seeing a dynamic because not only have we broken out of a key chart level here, just touch on that real quickly. Now, the key is this 1187 is on a closing basis. So, but that being said, we're breaking out of this key area here, but then also, as I mentioned in the story, it says, you know, hey, you want to get it because of the potential impact with this whole coronavirus. They're saying, hey, you're going to try and get out of that neck of the woods as much as possible. You're seeing that moving to the dollar, but you're seeing the yen weaken across the board. Now, it's not just weaken against the dollar. Then on top of that, the portfolio managers getting the heck out of Dodge, and the Bank of Japan already at 105%. You know, their whole issue, just printing money and doing what they can as far as their version of QE, and even talking about even expanding that even beyond. This thing could really get away from itself. And we could just see a series of days where it trying jumps up. Now, we do have some resistance, but you could actually make the case that, okay, we could maybe work a little bit higher. We might trigger stops at 112. We close at 1187. The market kind of dips back here, and then all of a sudden jumps up and starts tagging more. So you've got to be really careful with this interesting dynamic that's playing out with the yen. Let's go and move into the crude oil market. We did go in and cover that earlier. We'll touch back on that again. So here's the deal on the crude oil market. Talked about this here on the weekly. We've got a tweezer bottom here. If we get a close above 52.84, we've confirmed this tweezer bottom down here. And this tweezer bottom is significant because even though we didn't get much far below it, we did go sub 50. Okay, so make no bones about it. The bears are in trouble. Okay, and they're going to have to go in and cough up. Okay, there's some people who've been short. They're wrong. Okay, we get this close above 52.84. That's it. You know, adios, good night, arrivederci. It's over. We've got that bottom in place. You're going to look at the daily here. You can see here this market at the time, it looked like it was. I remember when posting this in the chat room that day, said it looks like we're going to 52.94 before pause, and then the Apple news came out and it really pulled this market lower, and it wasn't one quick sell-off. It was just steady, lower. But then as we came into the U.S. session early on, we started turning things around, and look how we finished. Okay, and then look at yesterday. We've really, with that, when you take things into consideration, where we're at, and the tweezer bottom here, and the pullback, then you can see here with this close here, it really put the bears under pressure. So we had bears puking it up yesterday. And we've continued to go move higher. The next key level is going to be right here at 54.34. You see that? I thought we might even almost tag it in Asia. I did post in here that we had resistance at 53.97. You'll see where I'm coming up here with this 53.97 here. And we got up to, I think it was like 54.10 or 12. And then the market, it just kind of ran out of gas. It's kind of weird because although it's quiet in Asia, but we came up to this high and then we actually made another little bit higher high. And then we just started working a little bit lower. We're coming off these lows, but you got to know, and I mentioned this yesterday, but I missed the level to come in. My level to come in, I think it was like 52.67 or something like that. And I think the low was like 72. And then from there, we just started moving higher and higher and higher. Look, these dips are going to be bought, and you can look right here, maybe a little bit lower in this 53.13, but these dips are going to go and be bought. And you can already see that the low's been put in, tweezer bottom. The difference is going to be if it's confirmed. And when I say confirmed is coming back in here. There we go. Close above 52.44, and that's going to confirm the bottom. Go back here. Apologize. 52.84. That will confirm the tweezer bottom here. And we've gone sub 50, so even the optics look good there. Still on a buy signal if you're looking at these moving averages right now. The exponential on the 30-minute still looking good. Let's go and move into the gold market. Well, the key thing on the gold market right now is we're above this VWAP. Now, yesterday, here was my thoughts, and that's why I wish I'd been up, but I wasn't up to pick this up when it got down here, is that yesterday, this whole 1608 down to 06 was excellent support. Now, we got up. The odd thing was is yesterday when we rallied up on the close, and it was very thin activity, we got up to 615. The odd thing was is that we had like 500 contracts that the market just chewed through. But the thing was is that at that time, the sellers were still very much in control. I'm looking here at the cumulative volume delta, but you can almost use this almost like an RSI to a certain extent. But it suggested we were still very, very weak, that we could go on and still sell off. And we came into the open, you can see here, we actually went up to 15, almost 1520, 1530, and then we saw the market weakening. At the time, now this was before this is at the open, but previously it had been going lower and lower and lower. Bears remained in control, the sellers remained in control. We took that dip down here, and then we saw a very nice rally, but all we did was come back to challenge at 615. So this was a pretty good area for a sell, because you can see here as we came back up, the market, sellers still had control, allowed this market to dip back. We've already come down here. We came down here. We saw a nice rebound off that 1608. This was just fantastic. I actually had a limit working, which I'd cancel when it didn't come down here, but that was at 1607.60. That was my limit area. You can see here, I wish I'd been up. I wasn't going to just leave a limit overnight. There's no way. It's just not the way I trade. I like to be in front of it just in case something happens. But boy, look at that. Then I wake up, I'm like, oh my goodness. And we were already 1613. But we are defending right now at the VWAP. We came back up here to challenge. We come back to fade. Really what we've been looking at or basing it on, and the market's trading rather closely, is what's happening here in the equity markets. So just as the same way that, I'll tell you what, we came this dip in Asia and we made this run back up in here, up to 615. I actually got short right in here. Right here I got short. Unfortunately, I didn't even hang on very long. I had a couple other things to go and do. But what I was doing is just trading inversely to the equities markets. So you can see here, as we started to come off here, you saw the gold market rally here. And doesn't sound like a whole lot, but that's a couple of dollars right there. But you can see as we come off of these lows, then you see the gold market going to dip back. But we are defending right now the VWAP right now. Pretty key. I still think there's a possibility that we can still take out the highs at 1619. The only concern I have is that it was crazy yesterday. the sellers remained in control throughout the whole time. Even when we were making that move up to 16.15 on the close, I was warning them like, well, you know, I was surprised by the way it chewed through there was like 500 contracts that chewed through like nothing. But that was late in the day, but you know, we shouldn't sound a whole lot, but at the time it was quite a bit of contracts sitting there and chewed through those. But my concern was, you know, the sellers remained in control. You can see we have rallied up here. You can see here, you see on this low, the market was really oversold. So, yeah, and actually we're below. You can see here, we're down here at the minus, you know, minus 1.0 here. So the market was overdone. So you certainly had, from a price standpoint and also from cumulative volume delta, they had an opportunity for this market to rally. Boy, we did see a rally, but we're still not overboard like as far as the buy standpoint, but you got to respect this VWAP for right now. Only thing is, I think that those that did buy, they are in some trouble a little bit. So the potential is once again the market to dip down, but it's already made this dip down here. I would look for this area probably to hold any dips down here towards this 1610, but obviously everything still is I think there's some good buying overall with the gold market, but it's going to depend a lot what happens with the equities markets. But one of the things also that's making its own impact is the safe haven status of the yen, and at least for now, losing that safe haven status, which is really allowing for some good undertone bid in the gold market. Why? When you get these dips down here and here, you got to pick it up because you're going to see the market not only from a technical standpoint jump up, but there's also some fundamental reasons why there's going to be a good undertone bid. Anyway, that being said, that's all we have for today. Thanks for joining us here on the European Crossover webinar. Oh, and by the way, if you are a user with MetaTrader 4 or 5, you actually have the opportunity to go in and beta test our patterns in play. Just go in and email support at ForexAnalytix.com. They'll get you set up for that. Once again, thanks for joining us and have a good day trading.